Hi there, ladies and gentlemen. My name's James Marley. I'm a co-founder of Livewire Markets, and we're in the thick of reporting season. And as promised, during reporting season, we're going to bring you coverage from some of your favourite Livewire contributors. And I have none other than Ben Clark from TMS Capital, who's joining us here today. And we're not doing one stock, we're doing two stocks. We're going to have a chat about ResMed and Fisher Paykel. Ben, great to have you back on the show, and thanks for taking the time to catch up.
Thank you, James. Apologies about the haircut and the lack of a shave. It's been well and truly down in lockdown here. I think we're in week 9, week 10 now, so I'm looking forward to getting out.
First trip to the hairdresser. Benny, before we get into the depths of it, you had the option to pick one stock, but you wanted to talk about ResMed and Fisher Paykel Health. Why are these companies interesting and topical to you?
Yeah, I just thought it'd be a good one to compare and contrast them a bit, James. You know, Fisher Paykel's just had its AGM. Unusually at its last result, it didn't give guidance for the year. So the market's sort of in the dark a bit as to how this one's tracking, but it's been such a good long-term performer for its shareholders. There is some crossover in these businesses. You know, they both have interests in the sleep market, also, of course, in the ventilator market, but there's different components of their own earnings come from different parts of these industries. So, you know, it's obviously very topical at the moment because there's a lot of demand, but sleep was a terrible place to be last year. That's starting to see an acceleration this year, and there's some pretty big things happening within the industry. So I thought it'd be a good one to, you know, talk about whether these guys are going to be winners, losers, you know, they're going to tread water, do we think, for a while?
Okay, well, let's start with the high-level intro. Can you give us the elevator pitch on each of these companies and just talk through, you know, their main operations, how they derive their revenues, you know, and what the opportunity is?
Yeah, so let's start with ResMed. ResMed is the global leader in sleep apnea treatment, particularly through its CPAP breathing machines. It sells a lot of consumables that are linked to these machines. It has a fast-growing SaaS business, which is helping physicians and patients to connect through a cloud-based platform. It's run out of San Diego, originally an Australian company, been a great success story, really, and still run by Mick Farrell, the founder's son, who's done an extraordinary job growing this business. We see it growing into what is still a much larger addressable market. It's a global business, as I said, and it's a very attractive industry to be going into. So that's probably the main thing with ResMed. If we look at Fisher Paykel as an alternative, Fisher Paykel were once upon a time spun out of Fisher Paykel Appliances. They were a tiny little medical unit that was started internally, and it grew under its own steam and incredible levels. It really became a global specialist in respiratory devices and machines and technology. And it's an area of medicine, I think, which has probably been underappreciated, underpenetrated, et cetera, et cetera. It's gone ahead in leaps and bounds since it was spun out of Fisher Paykel Appliances. It's one of the largest companies on the New Zealand Stock Exchange and dual listed on the Australian Stock Exchange. It's got a very innovative culture, I think, and has been very well run over many years.
So let's get into the results. ResMed provided an update week before last from memory, and you've had the AGM from Fisher Paykel Healthcare today as we speak. How did the results or the information that you received compare to your expectations? Was it better or worse? And also, how did that update compare to what the market was expecting?
Yeah, so look, ResMed has had a strong quarter. So this is a New York, they dual listed on the New York Stock Exchange, and they therefore report quarterly sales numbers. The result came in firmly ahead of the market's expectations. They did about 14% revenue growth for the last quarter, but probably the big news is what's going to happen over the next 12 months, because at the end of the quarter, Philips, which owns a division called Respironics, which is the second largest player globally and the key competitor to ResMed, announced a global product recall of their key CPAP device. Now, what this means for ResMed is there is suddenly a scramble amongst Philips patients for ResMed machines. And Mick Farrell on the call suggested that ResMed could increase their sales over the next year as a result of this recall by $300 to $350 million over the 12 months. The thing he really spent some time on, and this isn't just ResMed, this is virtually every company that I've been listening to date in the reporting season, is that supply chains are still in a state of chaos, that they are having to actually provide percentages of orders or allocations of orders. They just cannot keep up with the demand. And the sales success is really going to be driven on how hard ResMed can run, their supply chain. So we think the 350 mil that they have suggested is going to be conservative. These guys are very good operators. We think they'll run that supply chain a lot harder than potentially they've given the market guidance for. And this period could see them take a meaningful and potentially semi-permanent increase in market share in these key markets. Once patients go into the ResMed ecosystem, it's fairly hard to leave.
And what about the Fisher & Paykel update?
So the Fisher & Paykel is going through an interesting time. Obviously, over the last 12 months, being one of the largest manufacturer of ventilators and respiratory devices globally, they had an incredible year. I mean, I think their profit grew about 72% last financial year. And as I said, they didn't give any guidance for the year ahead because they just said there's so many different moving parts with COVID at the moment. It would be almost impossible to predict where they're going to end up for the year. So the AGM that they've had today, I think, is probably more meaningful because what we've had is a decent trading update. And my overarching comments on it would be that the predicted fall in sales that the company told the market to expect and that all analysts have baked into their numbers has occurred, but it hasn't been nearly as bad as what the market was expecting. I think if you look at the hardware sales, they were down sort of 4%. Interestingly, there was a big drop off in the Western markets or the more mature markets in Europe and America, but there was a big kick up in other markets, which is probably places like India, etc. So to me, this is actually quite good news. It would suggest that the sales have held up well. We know that Delta is now roaring throughout the world, and ICU units in many countries across the world are seeing elevated patients, unfortunately, back on ventilators and trying to help these people. And I think my read on it is that this year of what we sort of thought would be consolidation is probably not going to be as bad as the market thought. The company is still saying, we don't expect this current few months of sales will be repeated for the rest of the financial year. But these guys are conservative, and I think they're probably understating that this might be a bit of a better year than expected. And the big bump that they're cycling against from last financial year, the turn down this year might not nearly be as bad.
So out of those two updates that you've talked about, ResMed, Fisher & Paykel, what are the most important things that you think investors now need to be thinking about with each of these companies?
I think if I'm looking at ResMed, one thing I always tend to think occurs during earnings season is investors, they underestimate good news. They don't, they sort of say, oh, that was a beat, or, this could happen on the upside. They don't maybe they maybe don't look as far forward as what this could mean for ResMed. And I think this is potentially a lot more meaningful. And although the share price has run very hard on the back of all of this, I think the market might actually be underestimating how good this period could be for ResMed, not just on the short-term sales for the next 12 months, but more, not the wiping out of a competitor, but certainly a pretty nasty hit to the competitor. Since the quarterly result, they've also announced they're launching their new CPAP machine, the S11. with these CPAP machines, they're not like iPhones where every year there's a slightly improved device and, there's not that real rush to go out and upgrade. The life cycle of these machines tends to be like 5 or 6 years, and the new release looks meaningfully better than the past device. So, for ResMed, I think you're going to see patients being able to go out and get diagnosed and get treated in America in particular without worrying about dying from COVID. You're going to see Philips patients scrambling to move on to ResMed machines, and you're going to see existing ResMed patients wanting to upgrade to the new machines. The key to how good this is going to be over the next 2 or 3 years is how well they can manage that supply chain, how well they can meet demand. That will ultimately determine how good a period can they make hay while the sun is shining.
Okay, and if we were to switch over to Fisher and Paykel, as you said, maybe a slightly conservative update or a measured update from management there. What's the one thing you think investors really need to focus on or follow with that company?
So I think with Fisher and Paykel, I still think this is, like, to me, Fisher and Paykel is probably more of a hold at the moment. I think this is still a year or two where the company in some ways has to grow into its PE, and we have to go through this period of earnings consolidation. But I would say to people looking at this company not to, again, underestimate that one of the hardest things for Fisher and Paykel is to get those upfront hardware sales of their products into hospitals. Once they're in the hospitals, it creates this recurring income stream for the business. It's better if the devices are being used more frequently, but even if they're just sitting in hospitals, there still is sales that will flow through. So, and I think a lot of physicians, particularly in new markets like in America and Europe, are now, they've used these devices, they're more familiar with them. It takes years for that to normally happen, and COVID has created this massive pull through, probably in recognition of the brand and the technology that Fisher and Paykel's been very aggressively investing in for the last decade. So again, I'd say don't underestimate the long term in what COVID has created for Fisher and Paykel, but it wouldn't surprise me if over the next 12 to 18 months, the stock continues to range trade. But we own it, and I think that would be, it's a good opportunity looking 5 years out. I think you're going to do pretty well from this point.
So Ben, we're going to finish on a final point just to bring some of those views together, a great overview of the two companies. If you had to back one of those two companies, if you had to choose between ResMed and Fisher and Paykel, which one would you choose today and why?
I choose ResMed today, James. I think it has earnings momentum that the market is currently underappreciating. I think that they're being conservative in terms of the guidance that they've given the market. And I think the market is going to come to the view that their 50-55% market share, it could go to 80% if they can keep up with the demand and if they can manage that supply chain hard. It's a decade-changing proposition, what could happen in the next 12 months. And I think the market might be underestimating, how big this could be for the company.
Ben, thanks for jumping on the line during a busy reporting season. Always good to catch up, and hopefully we'll get you back on buy, hold, sell before too long.
Appreciate it, James.